Hi there, a very good morning and good evening to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm here with another video, and this video concerns CCL Products, which is in a league of its own. So let's understand about its numbers for Q2. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about CCL products, I have one request that kindly support me on Patreon. Once you do that, helping grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get a $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed company or market talk you want to have, you can directly email me and we can work things out with a fee. Now about the company, established in 1961, it is known as a Continental Coffee Private Limited, and it provides coffee beans for major clients. And they have acres of mainland tea coffee estate. Their products include spray-dried coffee, freeze-dried coffees, roast and ground coffee, etc. And they have become an FMCG brand of late by providing direct, you can say, coffee products of its own. One of the few beverage companies that is listed at the moment in the market. If you look at the financials, these are Q2 numbers, so September quarter numbers, which are pretty strong. Sales went up by nearly 60%, a profit jump of over, you can say, nearly about 20%. I would say this was closer to 19% ROE of 17% is pretty strong for this business, and margins at 17% is coming back into shape after a difficult couple of years due to the pandemic. If you look at the performance, it has been an outperformer over this year, and the stock really performed well during the second half, and the stock is up 50-60% from that point. It has been hitting new highs and is continuously being around there. Return ratios have been decent, and numbers are showing that how the company has grown leaps and bounds in a difficult, you can say, business environment and heavy competition. So on the ground level, the company has done well, and valuations are not very stretched, although it has become a slightly expensive, but it's not extremely stretched considering it being an FMCG company. So there could be more room for an upward move. In terms of technicals, there's a long-term support around the 450 levels for the stock. The stock is around 500, 510. The short-term support lies around 490. Somebody who's trading short-term on the stock can have a stop loss at 490. Somebody who have bought it at 370, 380 from a short-term point of view can have a stop loss at 490. If it gets hit, you can book profits there. It has run up a lot, so that you could see some consolidation in the stock. But it's a buy on major dips, say 450, 460 is a very good opportunity to buy into the stock. So in my opinion, buy on any decent fall. Say a decline towards 450, 460 would be a good buying opportunity. Valuations are still reasonable if the numbers continue to be strong. The stock could go up big time even from here. One of the better consumer names that listed mid cap in that domain, and do not buy more than 10% of your total holding. So this was a video on CCL products. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. Can you support me on Patreon? Thanks a lot for watching.